A microphone check and screen share check, please. Can you see the chart on coaching? Mic check and screen share check, please. Okay. Hey, thanks for your patience. I have Tuesday nights. I teach a doctoral course for St. Mary's University here in town to educational doctorate and doing resource management, strategic planning, budgeting, operational excellence, stuff like that. So I appreciate your patience. You've seen me write a few things lately about coaching, and I've been talking to some folks that are interested in coaching. And so I've been doing some investigating of the coaching profession out there for businesses. And I had been on the receiving end of proposals to be coached. And so this is what I think about it. My good friend Bill sent me a note. He said, hey, he's part of my Saturday morning or our Saturday morning true story circle. And he said, all this coaching talk makes me curious about the services. They sound expensive. So who chooses to spend money for this kind of help? That was actually the question I had, which is why I spent a little money to go investigate some workshops and spend some time on it. And he says, I assume any small edge in your trading realm can be worth millions, but why ask for advice on how to do something rather than simply hire a pro to do it for you? I personally seek feedback on important issues from my closest friends and reciprocate when asked. That seems to be working. Am I missing something? Warm regards, Bill, one of my best friends, best writer I ever met too. He wrote a book about a Catholic priest in Korea. He was doing a book to interview Korean War veterans while we still can. And it was going to be living testimony to them. And while he was interviewing these guys, a name kept appearing, Father Capon. And his story of bravery and courage was so compelling that he ended up writing a book about Father Capon, which resulted in Father Capon getting posthumously the Medal of Honor and recently awarded. And the story is just inspiring. And so Bill is quite a writer, and he's done a good service to the nation for that. So this is what I've discovered from coaching. In the business of coaching people who want to start a business, coaching people who want to start a business, some of whom want to start a business where they coach people to learn the skills that they themselves have learned, the numbers are staggering. So here's what I mean by that. I mean, there's a lot of people out there that know things and they want to teach people the things that they know. And other people want to learn the things that people can teach them. And sometimes that teaching takes the form of additional coaching one-on-one in the special skills and knowledge. And so to answer Bill's question, the reasons why people would hire someone to teach them to do a job that they want to do, as opposed to just hiring someone to perform a needed test. That's what Bill's point. Bill is not interested in being, this is my buddy, Bill Latham. He's not interested in being a trader. He's ready to just hire somebody to perform a needed task. Other people want to trade. And I said, well, the reasons why people would hire someone to teach them to trade or whatever it was, as opposed to just hiring someone to perform the needed task has everything to do with self-image, identity, passion, freedom, a calling, etc. So in the world of trading, which is one of the areas where I teach, people who hire a coach to teach them to trade have a reasonable belief that they should be the best manager of their own money, because while a manager is interested, they themselves are committed. Sort of like the old joke about, the chicken and the egg. The chicken is interested in the omelet, but the egg is committed. And so there's very good reasons in favor of the idea that you could be the best manager of your own money. There's other reasons why that might not be true if you don't have the skill. But anyway, watching out for your own money, there's a certain vested interest in that. So, all right. So I've been investigating this world of coaching people to run a coaching business or a business that features coaching. So if you were to do that, if you're going to hire somebody to teach you how to be a good business person who coaches, you would be hiring an expert to set you up with the support functions of a certain business process, how to administer a coaching program, so that you could coach people one-to-one or one-to-many, because that could be a lucrative gig, in addition to just simply teaching people how to do things. So here's the numbers. I was in a workshop this weekend that had 200 people, and they all wanted to have a coaching business in order to coach people in the skills that they offer. But these people who were at the workshop had important skill gaps, and these gaps included the following. As a rule, most of them had most of these gaps. They didn't know how to acquire students. They didn't know how to coach their clients in the acquisition of the skills that they themselves had. So it's like being a soccer player, but you don't know how to coach somebody else to be a soccer player. Those are two different skills. They didn't know how to manage a coaching business efficiently through the entire life cycle of customer acquisition, development, sustainment. And they didn't know how to run a business in a lean manner or parsimoniously, so that they could spend more time doing the teaching and coaching they love and spend the minimum necessary time on just administering a coaching business. Like if it takes me a lot of time and I'm inefficient in how to write a follow-up note to somebody for a coaching session, then I'm spending more time monkeying around with writing a memo than I am on doing the coaching. So that's what I mean by about how to have a lean operation for coaching. Well, of the 200 people that I was in that meeting with, 90% of them bought a coaching solution that ranged between $5K and $20K with no refund for a turnkey solution. And it was a very persuasive sales pitch, evidently, because 90% of the 200 people bought that coaching software solution, plus the coaching and how to use it that went along with it, which featured a pretty hard sell in coaching. So that is interesting, but it pales in comparison to where I was 2 weeks ago, where there were 2,000 people in a business coaching workshop, and 1,200 bought an annual coaching package to help them with their own business. That was anywhere from 5 to 15K. And were 60 out of the 75 people that I was in a room with bought a 25K a year premium coaching package. 90% of the people who bought the annual coaching package for 5 to 15 were going to end up becoming annual or multi-year clients. So if you do the math on that, that's a $10 million weekend. Yeah. You get 2 or 3 weekends a year like that, and you have an interesting business model. And what's interesting about that model is that if you are successful in coaching people to set up a coaching business, by coaching them, you're actually demonstrating that your own process works which is a reinforcing feedback loop if you're a systems thinker. But yeah, those conversion rates and the dollars involved are kind of staggering. So I was just interested in this as a student of nature. And so I spent time and a little bit of money to live in those ecosystems for the 3 or 4 days of, total immersion that it represented, so that I could understand who the people are that are spending these sums of money for acquiring those kinds of skills. And it also turns out that it seems that I can say things to people for free that are very helpful to them in that setting. Like I was able to offer just some insights about business and problem solving and collaboration and team building that seemed to help people, and I like to do that. So I was causing no harm. I was also in there because I was interested in meeting people that have startup businesses with skills that make them want to share with other people, because I'm interested in partnering with people that have a vision and passion and have work that might benefit me, and we could reciprocate. And so I'm always interested in working with interesting people on interesting things that they care about that would be outside of that coaching treadmill that I observe them in. I'm also not afraid to hang out with people and demonstrate what I do in my own business because some of those people that are spending money on those coaching services might be interested in my services. So I'm not afraid to tell them what I do. And so, my experience is that, the stats show that it's hard to make a living trading for most people, and everybody therefore says, well, you shouldn't be a trader because it's hard for most people to make a living at trading, as if that is saying something novel or useful, in the same way that carpentry, doctoring, being an accountant, most people are not accountants and lawyers and doctors. That's not their niche. It's not their passion. And the skill passion matchup isn't there either. I mean, there's just as many people that want to be doctors that aren't doctors as there are people that want to be traders that aren't traders. So there's something more universal at work here than just saying that trading is inherently hard. I mean, it's hard. Everything professional is hard. That's why only professionals do it, because it's so hard to do things better than the herd. So don't be surprised when it's hard to trade professionally. It's hard to do anything professionally. And that's why it takes a certain commitment, calling, passion, skill, alignment to make that all work. Go ask Van Miller there how many guys he knows that have tried and failed to make livings as architects for a career, because it's hard. The other thing that I found challenging was that there was a lot of folks in those meetings who they weren't actually sure about what they knew that would be of value to others, but they just felt like they wanted to be a coach because they wanted to help people, and that if they could just learn something that they could share with others, then they were sure they could be a coach and be helpful. And the desire was because they wanted to help people and they wanted to be a coach because somebody had coached them, and they wanted to do that. And they were searching not only for the skills to be a coach, but also for knowledge of things that could be coached. And to my delight, I found about 99.9% of the people that I was in those workshops with were genuinely motivated to want to help other people through their interaction. And that made me feel pretty good about being a member of this species, and that people are, by and large, genuinely altruistically motivated in the helping professions. And so I felt very good about life and my fellow man. So I'm thinking about coaching. I don't know. I like teaching. I like coaching soccer. I like helping people on stuff. I'm not going to charge 25 grand a year. Still thinking my way through it. I actually am kind of like more interested in helping graduates of the foundations course that have identified their own niche and are developing a system to trade for their niche. I want to help those guys create courses that they can teach for two reasons. Number one, it's going to help them learn their own system better, because that's how you actually learn at a very deep level, is try to teach that to others. And I also feel like that will help me solve one of my constant sources of despair. And that is, I have this drive to teach everybody everything I know. And that doesn't always help the team, when sometimes people just want to know what time it is and not need to know how to make a watch. So I feel like if I can help people develop systems that fit them for the niche that they're in, and help them develop a course that teaches that expeditiously with the minimum viable product and is robust, and then help them, market that or publish it or make it available, then they are going to represent a lot of people that are also in that niche, whether it be swing trading or the 5-minute Aussie or whatever it may be. And then I feel like I'm doing them a service, and I'm doing the community of practice a service by helping people that are in niches find things that are robust enough for them to start with and kind of jumpstart their path to finding and using a system that works for them. Not everybody needs to design a system to trade the system. Not everybody needs to create a course to share a system. Not everybody needs to teach a course to understand their system better for other people, but some people do. And I think there's room for all of us in the community of practice. And so that's, if I do some coaching, it will probably be like that. And plus what I'm doing here tonight, and that is, and every night, is people that are in the foundations course that are going through it and trying to concentrate on the trading that resonates with them in that 10-week course to get them well started, whether it's intraday trading or the 5-minute Aussie or the swing trading, or just improving your trade framing or anything beyond that. That's kind of what I want to do. So that's why I'm doing that. And I wanted to say that about coaching, because I actually know how to coach in many different areas. And I know the power of coaching when a good coach resonates with a player who's ready to be coached, and there's a good relationship between them, and the skills are complementary. It turns out that the player and coach, like a student and teacher together, can develop a reciprocal learning relationship that is win-win for both of them. Like, I've learned so much from watching Ken Hum and Luke Crockford and my brother and Bill Scheit and Glenn Osborne and Jeff Boccaccio and Sunal Darbar and Matt Richardson and Jim Carroll. I've learned so much by watching those guys muscling their way through, the things that I try to talk about, and persist in a way that allows them to make sense and make money at those systems, that there's personal gratification for that. So I just want to say, look, when you figure out what it is that you want to do or you need to be doing, you will also discover that you don't have as much time as you wish that you might have, now that you know what it is you want to do. You might even regret the time it took you to figure out what it was that you really want to do. Say, God, if I had just known that sooner. Like, it's obvious once you know, oh, I should have just known that better. No, you shouldn't. You know it when you know it. And it took that path for you to know it. So don't worry about that. And you won't have as much time as you wish you had to do all the good in the world that you want to do. But you do have exactly enough time to do your best on the next best thing, and trust the universe and let other people value it. And you just do the best you can and commit to excellence and service to others. And that's turns out to be good enough. So that's what I want to say about coaching. Appreciate your time and patience. So let's take a look at what we got today. Let me just start with the one chart workshop because you suffered long enough. Seriously, a one chart workshop. So TC 2000 alerts. Doesn't have to be TC 2000. Use alerts. Danny had 47 alerts programmed into his dashboard from last night. And this was one of them. This is in Robinhood, Financial Disruptor. It's on our list. You notice that these yellow boxes, what are those? Oh, those are minimum manageable risk boxes. What's this one? Well, this is an alert that happens when this thing breaks out one MMRB above the close, hybrid frog box, and he enters. And he uses the standard risk. Because if it fails below there, this thing's going down, and we'll just call that a collapsing dragon, and we're into our favorite pattern. But it doesn't go down. It goes up. It monkeys around a little bit. And when he gets the Uwe exit, he moves it up. And it moves up another leg and pulls back and starts to go up. So he adds another position and moves his stop up, locks in a third. It runs up. It sells off. He exits. That's all. So your job is to name the patterns, task 2, use words to describe the exit management strategy of this trade in words that you understand that make sense to you, as I briefly described them. And then I want you to think about, in general, all of the little parts of the team that are making these trades for us in our trading process. What would you say the job of the leader is, and the chief of staff, and the planner, and the point man, and the fireman, and the manager, the sniper, the medic, the analyst, the accountant, and the owner? Who are those members of your team personified in your inner psychodrama, in the inner theater of your mind? Who are those characters, those actors, those personalities, those important people from your life? Who are they, and what do they represent, and what value do they add to your overall trading process? And how are those important functions reflected in your overall trading strategy and trading plan? Thanks to my friend Van Tharp for helping me understand the power of parts. A one chart workshop. I mean, honest to goodness, if I couldn't turn that into a $5,000 fully immersion, high energy weekend workshop, then I'm a monkey's uncle. But there it is. That's what you do. All right. So we've had one leg, two legs up. After this little momentary pause at a doji, we closed at a new 30-day high, a new 10-day high. We're within spitting distance of the RL270 fair value. We closed above the Z2 floodplain, and we're close to the Z3. And now we're $15, $20 away from $20 away from the all-time high at 480. We're 4% off the all-time high. The 3-day home momentum is up. We are in the summer of price extension. The RL30 extension is strong up. The PSAR extension will cross the Bollinger Band mean tomorrow, which has reversed to the upside. The dragon is strong. It turns out that a PSAR flip is something you ought to pay attention to. Who knew? Oh, we knew. Sectors. The S&P was up 1.25 today. Diamonds lagged a little bit at 1%, sorry, Treasuries were up 0.76, so they're above the critical 130 price level. So they're not collapsing. These three speculative, the aggressive indexes were better. Emerging markets and tech were at 1.7. The Russell is on fire at 2.68%. Let's look at the things that underperformed first before we get all hot and bothered. Let's respect the other side of the trade first. What underperformed? Well, Brazil, 1.25. Wood and blended large cap crypto, 1.9, even though they're all in the daily summer. Look at all these things in the daily summer, how quickly the MACD 4 seasons change. You will recall a time when all of these things were in the daily winter. That's how quickly things change, and you want to monitor that. XLP, the consumer staples, 0.89. XLB, materials, 0.84. Just while we're here, just notice that when we come back, we're going to see XLY crushing it. That's the S&P discretionary compared to the S&P staple. So there's another almost 1% full difference between the conservative safety of staples and the forward-leaning growth opportunity of discretionary. Underperformers continuing. Blended commodities, 0.38. Finance, oil exploration, 0.12. Energies at the cut line, minus 0.26. Bitcoin futures, agriculture, minus 0.5 and 0.78. VIX, minus 3.42. And now the cluster of metals now giving back. U.S. Steel, Cliff, Alcoa in the minus 2.5 to 3.5 range. Bakkt into holdings still hovering around 7, was off a fraction at 0.29. Devon Energy off a little bit. Tesla up to 1,100 and was up 0.7, but it did lag the S&P and tech. So we're just mindful that it's still cruising, but maybe the easier money in the move from 800 to 1,100 is done, a 37% gain. So be mindful of that. Wheat and precious metals, 1.32. The FANGs, 1.4. Blockchain, the other lumber in Mexico, 1.6 to 1.7. Ethereum, 2%. Tech, oil, global future of finance, marijuana, and lithium, up to 2.4. Clean energy, continuing its little run here, 3.36. We called the turning point on that a while back, tentatively saying, well, it isn't failing further, and there's longer term reasons to believe that government and global money is going to fund that as a strategic alternative to Russian dominance of our economies. Yeah, that's a thing. S&P Bio, 4.25. Commercial real estate, 4.8. Moonshots, 5. The two ARCs, 6.5 and 6.7. We talked about this weekend, watching yourself in this rush to pile on the anti-Cathie Wood. Word to the wise on that. And yeah, Robinhood, 25%. Do you think there's a chance that tomorrow Robinhood is going to have another volatile move? Don't know which direction, but do you think a 24% day over day move is going to gather some attention? I think so. Trader's Delight. Rivian, 17%, the alternative to Tesla. That was another one of Danny's alerts. I didn't even show that one because it was only 17%. Squarespace, 6.3, PayPal, 4.3. That's how you get to a global future of finance that outperforms, is a lot of the individual components like PayPal, Squarespace, Robinhood, all are doing well. Apple, 1.9. So Coinbase and Microsoft, 1.5. Not bad. All better than the S&P. Those of you patiently waiting for the reports, we'll get those knocked out next. At long last, back to bullish normal conditions and overbought everywhere except the 90-day, which is close, just has to get above 80. We're 1.5% above the sideways boundary, because that's plus or minus 2%. So we're now 3% above the 200-day moving average. And everybody's saying, what, me worry? The risk Z is abnormally good, so it's above 2. Doesn't mean it'll stop, but that's been quite a move, as you have been noticing. Almost a 10% move off the swing low. Note to self, check the slope stat on the RL 10 and 30 to see how that is performing as a result of that rocket fuel off the bottom. The Russell, the Euro-Asia blend, the European 350 are all postured from previous weakness so that the rebound could be a dead cat bounce if we saw a sharp reversal from here, like if Biden keeps talking. What a week he's had. He has threatened the use of chemical weapons, threatened regime change, and alerted U.S. soldiers to go to Ukraine, and then denies that he even said those. He didn't deny, he just forgot he said them while his staff is walking it back, and then he says they're not walking them back. I mean, the only thing worse than him is Kamala Harris as the alternative. What in the world have we done? Enjoy. Intel, Microsoft, McDonald's, Diamonds, and Merck in the winning positions here. Apple looking good. I like that one. You still have a little bit of underperformance in Conoco and some of the energies like ExxonMobil, blended commodities. So there's still some weakness in the energies that are just kind of marking time, while the rest of the market with tech is coming back. Lots of dojis today. Home Depot's the only one that had a that is still in the auto framer, and it was up 1% today, so it may have turned the corner, and it is the only one that has room to catch up to its 10-day high, which is what makes it an interesting trade. Should also note, Nucor finally gave back after 12 months of just crazy outperformance, up 111% over the last year, more than a double. Metals and mining, oil exploration also gave back after that long period of outperformance, and that's why we frame them in both directions. No auto framers because of the new 10-day high. That's not surprising. That's why there's only Home Depot. So this is when you start looking at the squeezes. Which ones had unusually narrow ranges compared to their average range, and then maximize the use of the yellow zone trading stats to find ones that are postured for large moves intraday and which might yield swing trades. like, for instance, the market itself in SPY and in consumer discretionary in XLY, and emerging markets in EEM. That should be on your short list, along with DIA and XLK. So the diamonds and tech, that's telling you that the market itself is postured for more vigorous moves. This is not yet a parabolic move. So don't know what direction. It could be large. Those are the stats to figure out how to trade that professionally. Tons of summer. Feels easy when everything's in the summer. Take your pick. Here's where they're suffering. Home Depot, Pfizer, Goldman Sachs, especially Pfizer. Goldman Sachs, Caterpillar, still two great American companies ready to play. Leg one, leg two, starting to stretch to the upside. It has cleared the previous resistance. It's now at Z1 on the slope stat. How good was this call on the turning point when it crosses its own 10-period moving average outside of a Z, more than one Z-score away from the average? This is where the turning point was called by this indicator. That's why I look at that. Almost looks like the dragon peeking his head up and looking. Now, notice how strong the 10-period moving average is and starting to stall. I mean, the 10-period regression line slope stat. It's already at Z3. Hard to sustain that. Not impossible. But the 90 has just started to turn at more than 2 sigma away. That's how bad this move down was. That it bought a lot of time and space for the longer term swing to begin to unfold. The 30, the intermediate one, has already had a 1, 2, 3, 4 sigma move off its low, which happened down here at the turning point that we saw in the previous chart. That's why I pay attention to extremes. Statistical extremes show the underlying strength of trend and the turning points. You cannot hide from stats. Russell growth is excellent. Cliff's natural resources rocking. S&P and tech are both very strong on the short term. That's where the strength is. Tech, consumer staples, Cliff. All right, that's everything from there. We'll take a quick look at the trades. It's getting late. Appreciate your patience. This was Kimberly Clark frame from yesterday from Glenn, and we didn't have time to, he posted it after we did the reports. We didn't have time to cover it, but just a quick look at the excellent work he's doing. Was testing a double top. Here's the power of the PSAR flip. You get that one if you're paying attention. This one, this little sell off 1, 2, starting to turn. That's why this is so good and ready to break out, and plenty of room to go to the upside. Failure is easy to see. Good frame. I don't know what it did today, but it was probably awesome. All right, here's Tim. Mentally tired in this area. So that has to do with the time, will, pattern, and money. It takes, there's a cost emotionally doing this stuff. Let's see. So the question was the 1, 2, 3 entry on the short side too early? And I'm looking for right here. No, that's fine. That was just, that's a pretty good scratch. And this is probably, let's see, 0.4. Oh yeah, and then you get this one. That's exactly right. This was such an exaggerated move up that couldn't hold, and you think it's going to come. You have reason to believe it's going to come back to here. That's a good short. It didn't. I would probably have gotten out here, but still, that's a good stop and reverse. You got paid, and then you got paid. That's exactly right. All right. Let's see. This is one where, yeah, we get this one. It reversed quickly, so you take the hit. 1, 2, 3 entry would have been here. That's still pretty good because you're really waiting for the emerging dragon. After a fail, you say, all right, let me see it actually get above this little hump. So that's fine. Good scratch. You got paid a little bit in here. That's good. I like the reentry you got paid. That's good. This little sell-off and recovery. This is one where you have reason to believe it could work. That's a good scratch. That's a good short. These are all fine. The only thing I might say is this whole series in here, we might have just cut it here and said, hey, let me see it actually work and get a pinch and then a breakout from Z3 and then get that move. But still, this is not bad. I don't have any heartburn with this. You just had some maybe a little unfortunate stuff in here. I don't think that's a problem. Today was a tough sideways chop in the S&P. This is, let's see. Get that out of the way. Oh, this is Wojcik on the WMB3. Question. In this situation, should I take the position from the uptick level here? Yes. Or do I need to stick to the rule, the first uptick after the Williams signal? So let's remember what the WMB3 means. Oversold on Williams percent R. So we'll find this one here. Oversold. I'm going to guess and say that these are oversold. It has to be below -80, right? So I don't think those are oversold. So you actually need to have something on here that says these are actually oversold at -80. I'm assuming that they are. When it's over, oh, I'm sorry, I got to scroll. That's what it was. Sorry. Note to self, look at the whole chart, dummy. All right, so I've got some -80s here. Thank you. So I'm -80 and I'm waiting to see where's the uptick. Here's the uptick. So now I can take that uptick here, and now I'm looking for a breakout above this. But I also notice that I'm still upticking here as it's decaying. I like to keep marching this thing down. So right here, I like to take that entry because why not? Because now on my standard risk, this is a fraction of a fraction. But if it works, I get massive goodness. And then I want you to take a 1, 2, 3 exit right in here, because why not? Your average win we're going to see is 0.7. So when you're past 0.7 and that's past 0.7, you need to activate the sniper and get paid better than waiting to give back all of this. Especially after 2 exaggerated moves to the upside that could not follow through, take it. Uptick, breakout, roll over, exit right here. It didn't work. Get out. You gave it 5 bars. Don't take that much of a loss. Uptick, breakout, rolled over, get out. oversold, uptick, breakout, get out. And you're letting it come all the way to here. Your average win was 0.7. Your average loss was minus 0.6. This is already worse than the average loss that you're taking on something that never even worked for you. The less it works for you, don't wait longer to make it work. Get out faster. These things should work right away. If they don't work right away, get rid of them. Good. Collapsing Dragon would pay for the big win. That's marginally okay. This is probably a Kata 2 in here somewhere. We could take those and get paid something in here. And when you get those two little dragon horns and it rolls over, get out, get paid. 0.7 is your average win. 0.6 is your average loss. When you're above 0.7, don't let it go below. Grr. Let's see here. Get out there. You see that shelf right there? This is going to go or get out. This should go, get out. That's a whole -1 from 0.5 and 0.5. We gave it almost double our average loss on something that never even moved in your favor. In conclusion, get out. Good. Kata 2, Kata 2. Stop believing in the pattern. That's okay. That's good. That's good. Good. Better. I'm looking every time I see a loss, I'm looking, is it less than your average? This was probably around an average win, I'm betting. At least you got paid. This was up almost 1.3, almost a double win, and we gave back a lot. Good scratch. Good scratch. There's probably a Kata 2 in here. Yep. This is good. CDs galore. I don't know if that one is no, that one's not an entry. Look, here's the uptick. So that, oh no, okay, I take it back. That's good. And we gave back a full -1. After watching this and it doesn't go in your direction, don't give back -1 because you want to believe that it's going to work. Stop believing. Get paid. Kata 2. Take this one, not that one. I take them both, but oh gosh. Oh gosh. Still, net positive for the day, about 4R. In spite of all that harassment, good day at work. Here's what I mean. 0.7 on the average win. You got to know those numbers, man. 0.7 and 0.6. Don't take losses more than that. Still, positive expectancy, but not enough to make a living on. until we fix that and keep more of that. Keep working. You're on the path. SSCs only. Harsh winter, crosses a baby dragon, crosses the dragon, hits the PSAR. I could live with that. Take this, as long as you keep taking those. Yeah. And also this. There's a Z3 pinch. That is a screaming buy. CD. Kata 2 would pay. We'll probably see that one tomorrow. All three patterns integrated. Yeah, there's your payoff. Kata 2s for the win. Especially when you feel the whole market moving. I'd think strongly about it. Double scoop on that one. My brother. Hey, when you see these kinds of things where you get weird color combos, all you got to do is click to another symbol and back to it, and it will force this back into giving you the correct, which is spring or summer, spring, summer, whatever. And it'll get those colors back in correct status for you. So this is a good 0.8R. That's your little trailing 0.8R that hits. So he gets his entries where he wants, and then just puts a 0.8 trailing stop on it and gets paid. Kind of an auto manager, auto sniper approach. Pretty good. He got home in time for Bacht, for spring becoming summer. This is probably an area I would look at once it's kind of cleared this crap and it failed to fail and starting to roll. But still, with the 0.8, that's pretty good 2R. Nice day at work. $3.5 on a Alcoa, because why not? And this was in the metals when everything was getting smoked. They had been beaten down so much that you get the winter, spring, summer above the dragon, rising tide, because why not? He's got a couple 3R in hand with momentum. Why not? And it didn't follow through. That's enough. So 3.5R. So that's about 6R today. Nice work, brother mine. Let's see. 5-minute Aussie. Less. Yeah, those meetings. You need to start charging them for you attending your meetings. This is nice here. Winter becomes spring, hits the PSAR, standard risk, gets paid, gets paid, gets paid, gets paid. Just getting paid. 1.6, 1.1, and 0.2, 1.3. So 2.9. Okie doke. And missed the easiest move of the day. I hate when work intrudes. This, I recognize Glenn Osborne, the Be More trader. Putting together his concept niche for targeted swing opportunities in multiple time frames that can get started well and might lead to swing trade breakouts where he's going to keep a piece. So he'll day trade to earn money, keep a piece for a swing, and then look to add. So nice, tight reward to risk box in both directions as part of a massive run up and an orderly pullback. This is ready to go up or down. If it breaks below here, below 53, he should be adding the second position. But otherwise, he's got a nice intraday trading range in petroleum. Stanley Black & Decker tools, industrial. That's why you're interested in summer rolling over to fall, rolling into the winter, and then the supported winter crossing. Oh, caught a 2 collapsing dragon on that one, on that move. Holy cow, that's a minus 20% sell-off just on that leg. Collapsing dragons. Statistical excursion. SSC has pulled up and then a nice recovery into a critical state, ready to go. He's going to wait till it gets above 151 for thinking about a second position. Otherwise, it's a day trade in that area in both directions. Wait for a break below 137 for a short swing. I don't know. I want to be shorting too many things in this market on a swing. Walgreens. You will notice that these are all showing exceptional reward to risk ratios. This is where you want to be double short right there. I think that's almost a support level that you could get a second one in for that leg. Because if it can clear this, this feels like free running. They'll say, oh, that was just panic selling, and that's the real fair value. And he's really gonna not, he will be in here on the short side, but he's waiting for it to clear this before he gets out of this and go. That looks good on a day trade in Walgreens North. And that's not much, that's about a 60, 70 cent risk. 0.5%. Oops, sorry. Dang it. All right, U.S. Steel. This is Eddie. Harsh winter, and your question was 1 or 2. I like 1. You'd have taken the loss and then re-entered and then gotten paid that more than compensates for that one. I don't know that that's not a CD until you get to here. This is a RLXD reversal. That's that's an owl in here somewhere. But this is the one, if you take them both with proper play, this will net positive, but not much. Good job staying out of the chop. Then the rest of the follow through, he crushes it as it begins to make its move in the afternoons. Gets his SSC. I don't know that that's a harsh winter. Maybe this is fake 1 go 2, but I like that anyway, because if it reverses and fails, that's going to be a big move. So I just take it. I'd have considered that. But since you're already in it, you don't have 2R in hand yet. You just note that, yeah, that's a good entry. Great exit, great re-entry, get paid. This was worth a shot. Great, 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 and great. 3R, just like downtown, Ed. Don't go changing. About time the Luke Crockford that we know and love is back. Aussie. Z3 pinch breakout. Gets paid, still gave back too much. Gave back too much. Come on, Luke. Low, higher low. Nice, nice. Welcome back. All right, that's everything we got. Keep marching. Guys are getting it done. You know, in a nutshell, if I was going to say what I said earlier, if that represents the body of knowledge that we have in our community of practice, you know, core, swing, day, and with some kind of hybrid trading in here, there's a bunch of little systems and niches in all these places that resonate with you. And there are guys that are generating quality signals and systems in here and showing their work. And when you find things that resonate, start with something that is already resonating and then expand outward from that. Use the principles of the foundations to help you, but really get to mastery on the bowl that you want to carve. Learn how to carve that bowl, develop skills, and then expand those skills larger and larger. That's sort of the technique, okay? The book on that, really, you should read Mastery by Robert Greene from 2012. He wrote the 48 Laws of Power. Both of those are among the best books of the last 40 years when it comes to life experiences, thriving and surviving, then thriving in the world. Okay. Good stuff. Take good care. See you tomorrow.